Is here with the business news with all the details.
Hello, Stuart. Yeah, the concerns about the global economy really driving the Asian markets far into the red today. The Nikkei in Tokyo, the worst hit, down over 4% in trading this Tuesday. Disappointing data on the manufacturing sectors in the US and China, causing concern about those the world's two largest economies. The Hang Seng and Hong Kong, as you can see, they're also down over 2%. Trading in mainland China is closed, of course, still for the New Year holiday. The Kospi in Seoul also in the red. Things aren't quite as bad here in Europe in the open. All the main indexes are in the red, but only down, as you can see, around 0.5% there. So not the same dramatic scale of sell-offs that we saw in Asia and on Wall Street yesterday. Just to check on one share in London, the online retailer Ocado down over 2% after yet again its results reveal that it's failed to turn a profit. Now, these mass sell-off of shares are becoming somewhat of a trend so far this year. 2013 was thought of as the bumper year for shares, but is 2014 going to be the year of the sell-off? Well, Delano D'Souza has been looking at what's moving the markets.
Wall Street's worst day in over 7 months. On Monday, markets in the US ended the day down over 2%. The markets reacted to a report that showed manufacturing activity in the United States had slowed, adding to fears that the world's largest economy is not recovering as quickly as everyone had hoped.
When we got the manufacturing report, I think it sort of added gasoline to the fire, and that's why we ended up in the red.
In January, a Chinese government report indicated a slowdown in factory output, furthering concerns that the world's second largest market is weakening. The US Federal Reserve also began rolling back its stimulus measures in December. Tapering is expected to have consequences in emerging markets, cash risks being sucked out of markets considered risky and moved back to the United States.
I think the tapering is playing in the international markets because it's making the currencies of the foreign countries, emerging markets, less attractive, primarily because of the rising rates that are likely to be occurring here in the States.
Market performance in 2013 indicated the world economy had turned a corner. In Japan, for instance, December saw the country leading the biggest gains in the developed world, but now things have changed. Analysts say the market turmoil won't be over anytime soon.
Now, this next one's one we've not talked about for a little while. The US debt ceiling also worrying investors.
Yeah, that old chestnut, the spectre of problems on the Capitol Hill and its finances affecting investors' concerns as well. The latest warning coming from the Treasury Secretary, Jack Lew, who says that Congress needs to raise the debt ceiling by the end of this month. Otherwise, the country risks running out of cash to pay its bills with. The debt ceiling issue has been used by a political football by politicians in Congress for some time. Jack Lew is hoping that won't happen this time around.
The truth is, the longer we wait, the greater the risks become. Whether it's the economic recovery, the financial markets, or the dependability of Social Security payments and military salaries, these are not things to put at risk.
Now, some of the day's companies news, and we'll start with BP, where profits there fell by 37% in the last 3 months of 2013 as the company said the Gulf of Mexico oil spill would cost it more money. The world's number 4 oil company set aside an additional $200 million because of the 2010 oil slick, but BP's annual net profit still more than doubled last year to $23.4 billion. The Swiss bank UBS earned $1 billion in the fourth quarter of last year after massive losses in the same period in 2012. The bank's full-year profit was $3.5 billion compared with the loss of almost $3 billion a year previously. UBS had to set aside $86 million to cover legal costs in the last 3 months of 2013. It says it continues to expect to attract new business this year despite an uncertain year ahead for the global economy. And Toyota is on course for a record annual profit this year after earnings in the last 9 months more than doubled to $15 billion. The carmaker benefited from strong overseas sales and the weakening value of the yen. It says it's expecting profits of almost $19 billion for the year to the end of March.
And while some companies are making profits here in France, there's one brand that is not doing so well, the smile being wiped off Mickey's face, I guess.
Yeah, the economic doldrums have even affected the happiest place on earth. Euro Disney has seen its earnings fall 6% in the last 3 months of last year. The operators of the theme park just outside Paris took in €306 million over the period. Their sales were hit by falling visitor numbers, though, although through its strategies, visitors who do visit Euro Disney are spending an average of more. They're spent up about 4% for each of the theme parks as part of an ongoing strategy by Euro Disney to keep its earnings up. Sad times for Mickey.
Yeah, poor tough for Mickey. Not good for Minnie either, apparently. Stephen, thanks a lot. Stephen with Business on France 24. We're going to have a look at what's grabbing the headlines in the international press today. Flo's with us here on set, of course. A lot